Have you ever wondered that if every country is in debt, who's the creditor? Who's the money owner? There's a number that should absolutely terrify you. It's bigger than the GDP of every country combined. It's larger than all the wealth that has ever been created in human history. And it's growing by over $1 trillion every single year. That number is $315 trillion, the total amount of debt on planet Earth. Every government owes money. Every corporation owes money. Every household owes money. But here's the question that breaks people's brains when they really think about it. If everyone owes money, who exactly is getting paid? The United States government owes $38 trillion. Japan owes $9 trillion. China, despite being the world's manufacturing powerhouse, owes enormous sums. Germany owes money. France owes money. Even oil-rich nations like Saudi Arabia carry massive debt loads. Every single developed nation on Earth operates in the red. But this isn't just a government problem. Corporations owe trillions more. Apple, Microsoft, Amazon, companies sitting on mountains of cash still carry billions in debt. And households, regular families trying to make ends meet, owe another 40 trillion globally in mortgages, credit cards, student loans, and car payments. So we have this bizarre situation where literally everyone owes money to someone else. But when you start tracing the chain of creditors, when you follow the money upstream to see who's actually holding all these IOUs, you discover something that will change how you see the entire financial system forever. The answer isn't what you think, because the deeper you dig, the more you realize that this isn't debt in the way most people understand debt. This is something far more sophisticated and far more disturbing. Think about debt the way you normally experience it. You borrow money from a bank to buy a house. The bank has your money, you owe the bank, and every month you send them a payment until the debt is cleared. Simple, linear. The bank is the creditor, you are the debtor, and there's a clear relationship between the two parties. But global debt doesn't work that way. Global debt is circular, interconnected, and deliberately designed to never be repaid. Let me show you how this actually works. The United States government issues treasury bonds to finance its operations. Who buys these bonds? Well, about half are purchased by American institutions, banks, pension funds, insurance companies, mutual funds. So Americans are lending money to the American government. But it gets stranger. The Federal Reserve, which is technically a private institution owned by member banks, also buys massive quantities of government bonds. They create new dollars out of nothing and use those dollars to purchase debt from the Treasury. So the government borrows money from an institution that creates that money specifically to lend it back to the government. Meanwhile, foreign governments buy American debt with their own currency reserves. But where did those currency reserves come from? They came from trade surpluses with America. So America imports goods, pays with dollars. Those dollars accumulate overseas, and then foreign governments use those same dollars to buy American debt. The money flows in a circle. America sends dollars abroad, and those dollars come back as loans to America. But it doesn't stop there. Those same foreign governments issue their own debt, which American institutions buy through international funds and sovereign wealth funds. Japan lends to America, America lends to Europe, Europe lends to developing nations, and developing nations park their foreign currency reserves in American and European bonds. Everyone owes everyone else. It's a planetary web of interconnected obligations where every participant is simultaneously a creditor and a debtor. This creates a system where debt can never actually be eliminated because the debt itself has become the foundation of the money supply. When governments issue bonds, those bonds become assets on bank balance sheets. Banks use those assets as collateral to make loans to businesses and individuals. The businesses and individuals deposit their loan proceeds back into banks, which then use those deposits to buy more government bonds. The cycle feeds itself indefinitely. Here's where it gets really twisted. The institutions that hold all this debt, the pension funds and insurance companies and mutual funds, they're managing other people's money. Your retirement account, your life insurance policy, your savings account. These are the funds being used to purchase government and corporate debt. So in a very real sense, you are both the debtor paying taxes to service government debt and the creditor receiving interest payments on that same debt through your retirement accounts. But the returns aren't distributed equally. The largest asset management companies, firms like BlackRock and Vanguard and State Street, control tens of trillions in assets. They collect management fees on every transaction, every dividend payment, every interest payment that flows through the system. They don't own the assets directly, but they control how those assets are deployed. And the larger the debt load becomes, the more assets flow through their management, the more fees they collect. This is why 38 trillion in government debt isn't seen as a crisis by the financial industry. It's seen as inventory. Every dollar of debt represents an asset on someone's balance sheet. It generates interest payments, provides collateral for additional borrowing, and creates the liquidity that keeps the entire system functioning. The debt isn't a bug in the system. The debt is the system. And this explains why every time there's talk of paying down national debt or reducing government borrowing, the financial markets panic. If governments actually paid off their debts, the global supply of safe assets would disappear. Pension funds wouldn't have anywhere to park their money. Banks would lose their most reliable source of collateral. The entire financial system depends on governments continuing to borrow, continuing to issue new debt, continuing to pay interest on obligations that are never intended to be repaid. But there's a darker layer to this story. Because while everyone participates in this circular debt system, not everyone benefits equally. The interest payments flow upward. Taxes collected from working people get sent to bondholders who are disproportionately wealthy institutions and individuals. Government debt becomes a mechanism for transferring wealth from taxpayers to capital owners. And because the debt is never repaid, only rolled over and expanded, this transfer continues indefinitely. The same pattern plays out globally. Developing nations borrow from international institutions like the World Bank and International Monetary Fund. When they can't make payments, they don't default. Instead, they restructure the debt, accept new loans to pay the interest on old loans, and agree to economic policies that open their markets to foreign investment. The debt becomes a tool of control, a way to ensure that resources continue flowing from borrowers to lenders, even when the borrowers can't actually afford the payments. This is the machine that runs underneath everything. Every war, every economic boom, every financial crisis happens on top of this foundation of interconnected debt relationships. And the machine has one primary function: to ensure that interest payments continue flowing from debtors to creditors, regardless of whether the underlying obligations can ever actually be satisfied. The people who designed this system understood something fundamental about power. Whoever controls the debt controls the debtor. And when everyone is in debt to everyone else, whoever sits at the center of that web, whoever manages the largest pools of assets, whoever collects the most fees on the most transactions, they control the entire system without having to own it directly. So when you ask who the money is owed to, the answer is both everyone and no one. It's owed to a system that has transformed debt from a simple relationship between creditor and debtor into the organizing principle of the global economy. And that system has names, faces, and addresses. It has beneficiaries who profit enormously from keeping everyone else trapped in perpetual obligation. This brings us to the most important question of all. What happens when this system breaks? Because every debt-based system in history has eventually reached its breaking point, and we're starting to see the cracks form right now in real time. The first crack is mathematical. Debt is growing faster than the economy that's supposed to service it. Global debt has tripled in the past 20 years, while economic output has barely doubled. Interest payments are consuming larger and larger portions of government budgets, corporate cash flows, and household incomes. At some point, the math stops working. You can't borrow forever when your ability to repay is shrinking relative to what you owe. The second crack is political. people are starting to notice that the system isn't working for them. They're paying taxes to service government debt while watching their own living standards decline. They're making mortgage payments and credit card payments while the value of their labor buys less and less. Meanwhile, the financial institutions collecting interest on all this debt are posting record profits. That disconnect creates political instability, and political instability threatens the confidence that keeps the whole system functioning. The third crack is geopolitical. The circular debt system only works when everyone agrees to keep playing the game. But what happens when major players decide they don't want to play anymore? China has been reducing its holdings of American debt. Russia has been kicked out of the Western financial system entirely. Other nations are exploring alternatives to the dollar-based system that has dominated global finance for the past 80 years. When the web of interconnected obligations starts unraveling, when countries stop lending to each other and start demanding repayment in real assets instead of promises, the circular flow breaks down. And here's what most people don't understand about systemic breakdown. It doesn't happen gradually. It happens suddenly, violently, and completely. One day the system is functioning normally, everyone is making their payments, confidence is holding. The next day, a major borrower can't roll over their debt, creditors panic, liquidity freezes, and the entire network of obligations collapses like a house of cards. We've seen smaller versions of this before. In 2008, when housing debt became unpayable, it triggered a cascade of failures that nearly brought down the global banking system. In 1997, when Asian currencies collapsed, it sent shockwaves through every interconnected market. But those were regional crises, limited in scope. What's coming could be planetary, because this time, the debt levels are higher, the interconnections are deeper, and the tools that central banks used to manage previous crises have already been exhausted. Interest rates are already near zero. Money printing has already reached unprecedented levels. Government debt has already exploded beyond historical norms. When the next crisis hits, there's no ammunition left to fight it. The people who control this system know what's coming. That's why they're buying hard assets. Real estate, commodities, precious metals, art, anything that will hold value when paper promises become worthless. They're not worried about the debt because they understand that debt is just a tool, a mechanism for extracting wealth from the productive economy and concentrating it in their hands. When the system collapses, they'll still own the real assets. Everyone else will be left holding worthless IOUs. This is the ultimate answer to who the money is owed to. It's owed to a class of people who have figured out how to use debt as a wealth extraction machine. They don't need the debt to be repaid because they're not interested in getting their money back. They're interested in the interest payments, the fees, the control, the ability to dictate terms to borrowers who have no choice but to comply. And the beautiful thing about this system, from their perspective, is that it's self-perpetuating. The more debt that gets created, the more assets they control. The more assets they control, the more influence they have over economic policy. The more influence they have over economic policy, the easier it becomes to create more debt. It's a feedback loop that concentrates wealth and power at the top while distributing risk and obligation throughout the rest of society. But feedback loops can work in reverse too. And when they do, when confidence breaks, when the mathematical impossibility of infinite growth on a finite planet finally asserts itself, when political and social systems can no longer bear the weight of exponential debt expansion, the reversal is swift and merciless. The signs are already visible if you know where to look. Central banks are buying gold at record rates. Wealthy individuals are moving assets offshore. Governments are implementing capital controls. Corporations are hoarding cash. Everyone with inside knowledge is quietly preparing for what comes next, while publicly maintaining that everything is fine. The tragedy is that none of this was necessary. Debt can be a useful tool when it's used to finance productive investments that generate returns greater than the cost of borrowing. But that's not what happened. Instead, debt became a way to financialize everything. to turn every human need and economic relationship into a profit center for the financial system. Housing, education, healthcare, infrastructure, things that were once provided as public goods or affordable services, became debt-financed profit centers. People went into debt to access basic necessities. Governments went into debt to provide services their tax base could no longer afford. Corporations went into debt not to expand production, but to buy back their own stocks and pay dividends to shareholders. The result is an economy where debt service consumes an ever-increasing share of economic output, while actual productive capacity stagnates or declines. We're paying more and more to service obligations created to purchase things that are worth less and less. It's a machine designed to extract wealth from the future and concentrate it in the present, from the many and concentrate it among the few. The mechanism is so elegant in its cruelty that you have to admire the sophistication. Every crisis becomes an opportunity to expand the system further. When governments can't pay their debts, they don't declare bankruptcy like individuals or corporations would. Instead, they accept bailout packages that come with conditions. Structural adjustment programs that force them to privatize public assets, cut social spending, and open their markets to foreign investment. The debt crisis becomes a tool for reshaping entire economies according to the creditor's preferences. Greece provides the perfect example. When the Greek government couldn't service its debt in 2010, European institutions didn't write off the loans. They provided new loans to pay the interest on old loans, but only in exchange for devastating austerity measures. Pensions were slashed, public services were privatized, national assets were sold to foreign buyers at fire sale prices. The Greek people suffered through a depression worse than the 1930s, but the bondholders kept getting paid, and the debt never went down. It just got restructured, rolled over, made more manageable, but never eliminated. This is the template that gets applied everywhere. Argentina has defaulted on its debt 9 times in its history, yet it keeps borrowing and keeps finding itself in the same trap. Each default is followed by restructuring, new loans, new conditions, and ultimately new debt that exceeds what came before. The country becomes a laboratory for testing how much wealth can be extracted from a population before social systems completely collapse. But the most insidious part of this system is how it captures the institutions that are supposed to protect people from predatory lending. Central banks, which were originally created to provide stability and prevent financial panics, have become the primary enablers of debt expansion. They keep interest rates artificially low to make borrowing easier. They purchase government bonds directly when private investors won't. They provide emergency lending to banks and corporations when those institutions make reckless bets with borrowed money. The justification is always the same. We must prevent systemic collapse. We must maintain confidence. We must keep credit flowing. But what they're really doing is socializing the losses while privatizing the gains. When debt-fueled speculation pays off, the profits go to private investors. When it fails, the losses get absorbed by taxpayers through government bailouts and central bank interventions. This creates what economists call moral hazard on a planetary scale. If you know that your bad bets will be covered by someone else, you have every incentive to make bigger and riskier bets. Financial institutions leverage themselves to absurd ratios because they know they're too big to fail. Governments spend far beyond their means because they know central banks will buy their bonds. Corporations borrow to fund stock buybacks and executive bonuses because they know they can always refinance when the bills come due. The result is an economy built on speculation rather than production. Instead of using capital to build factories, develop new technologies, or improve infrastructure, we use it to bid up the prices of existing assets. Stock markets become divorced from the performance of actual companies. Real estate prices soar far beyond what local incomes can support. Commodities get financialized and traded like casino chips rather than consumed for their actual utility. And at the center of it all sits a handful of institutions that have grown so large and so interconnected that they've become the infrastructure of the global economy itself. When people talk about the financial system being too big to fail, they're not talking about individual banks or insurance companies. They're talking about a network of asset managers, clearing houses, and payment processors that handle the majority of global financial transactions. These institutions don't just participate in markets, they are the markets. They set prices through their trading algorithms. They determine which companies get access to capital and which don't. They influence government policy through their lobbying efforts and their control over pension fund assets. They've become a parallel government with more real power than many elected officials. So there's your answer. The money isn't owed to China or Russia or some shadowy cabal of bankers in a back room somewhere. It's owed to a system that has made debt itself into the most profitable product in human history. A system where your pension fund, your insurance policy, your savings account have all become unwitting participants in the largest wealth extraction machine ever created. The 315 trillion isn't a problem to be solved. It's the foundation everything else is built on. And until people understand that this isn't about money, it's about control, nothing changes. If this opened your eyes to how the machine really works, subscribe, because the patterns are everywhere once you know where to look.